Kenneth at Remax Realtron, and today we're going to be talking about why it is a good time to buy now. And I'm here with Mohit. He is the top of the top in terms of mortgage brokers and much years of experience. We're very, very grateful to have you here.
Oh no, thanks for having me. You're very kind. Thank you. And you and I have been working together for a couple of years now. Mm-hmm. And as we understand, this information is very important.
Yes.
So thanks for having me and thanks for organizing this.
That's good. No, this is very good information for everybody. And I think there's a lot of extra knowledge that I don't think people know out there. So this is why we're here today.
True.
Great. So first we're going to talk about why we should buy today for buyers.
Mm-hmm.
Stay tuned for the next episode for why we should sell today, which is targeted towards sellers.
Yep.
So buyers today, it's 1 week before December 2024. So just so everyone knows, we're gonna log this. Buyers right now, they're at a pretty good spot because as we know, interest rates are coming down.
Yes.
Finally. So things are becoming more affordable. What is the average rate right now?
So if you are buying insured, which is less than 20% down, we'll get into the details of that. The rates are in the high threes right now. 3-year fixed is what I'm talking about.
Yes.
And if you are looking at variable, maybe prime -1, prime -1.1, which is say 485 to 495 for insured purchases.
That's really cool. I can't wait to get into that. So for buyers today, I think we're gonna talk very, very macro from the TREB stats, because I can't get into every neighborhood. So if you guys are watching, just comment or DM me privately if you want to know about your neighborhood. I'll do like a microscope on your neighborhood to tell you which products are good and if it's worth going into. So we pretty much dissect the real estate market with detached homes, townhomes, and condos. These are the 3 biggest factors. And when people ask me, how is the market? It's really hard. I don't know. Are you buying a house, a condo, or a townhome?
Yeah.
And also where?
Of course.
So the metrics that I use is I look through the sold, the inventory, and the price.
Yeah.
Right now, if you look at year over year, TREB actually has it. We have the October numbers. If you're looking for a condo, year over year, you're very lucky because prices have come down.
Right.
This is macro in general. Has come down about 2%. Well, which is pretty good. I think we're at a good spot if you were to buy condos. If you were to buy a detached home, sadly, the prices are actually higher than last year.
Oh, okay.
So nobody really knows, and I don't think a lot of realtors break it down. So if you're looking for a home, detached, you should really jump in the market because the prices are going up,
right,
from last year. In terms of inventory, plenty of condos. We all know downtown condo. We have plenty, and which is good.
Yeah.
For the buyers, I'm not sure if you've been in the bad times where you look at a condo and poof, it's sold.
I've seen that time.
Yes. So right now you have time to go home, digest, and then come back and negotiate. Whereas before, I don't think you're going to get that opportunity. Again, in history, December is probably the slowest month, meaning you do have a little bit more time. Sellers will take a little longer to sell, which is great. I think if you're in the market for a condo or even a detached, it's a great time to buy.
Yeah.
Townhomes have been pretty level lately, and also depending on neighborhoods. I think we're just talking very macro right now. So yes, I think it is a great time.
Yeah.
Reach out to me, Mohit, if you guys are looking to buy. So Mohit, give us some technical financial updates.
Right. So on the mortgage side of things, as you know, it's been all over the news. There are a lot of changes that are happening. So there are 4 major changes that we need to know of. 2 of those apply to buyers, insured mortgages in particular, and the other 2 apply to homeowners, which we can address maybe in the next one.
Well, stay tuned.
Exactly. But the first two are for buyers who want to get an insured mortgage.
What is an insured mortgage?
Right, I'm happy you asked. So let's say you want to buy a property with less than 20% down payment. When you do that, the banks are happy to give you a mortgage, but they'll take out an insurance policy. It's called default insurance, which is to protect themselves in case there's a default by the borrower. So let's say if the borrower stops making payment, the banks have an insurance to cover themselves.
Nice.
You might have heard of CMHC.
Yes.
That's one of the insurance provider. You also have Genworth, which is Sager now, and you have Canada Guarantee.
And you have access to all of those.
We have access to all of them.
Amazing.
So when you buy with less than 20% down, the banks take out an insurance policy, and that's why it's called an insured mortgage.
I see.
And both the changes that we'll talk about today apply to insured mortgages only. The first change is the increase in the property cap, and very relevant to what you were talking about in terms of a good time to buy maybe townhouses, detached homes, etc., and even condominiums. So in the past, if you wanted to buy insured, with less than 20% down, of course, the max property cap was $1 million. What that means is, as soon as you hit $1 million property value, you couldn't do anything less than 20% down. Flat 20%, 200K for $1 million property.
So FYI, the average detached home in Toronto is actually $1.1 million. So
year
you
over
couldn't
year
get as well. Like in terms of last year and this year, we've always been over 1.1.
Exactly. So if in the past, you couldn't get it.
No.
Now that cap is being increased to $1.5 million, which means that you can buy a property up to $1.5 million with less than 20% down payment.
That's more like
And that now becomes more inclusive if you wanted to buy a bigger home, like a detached house, etc. The down payment still remains the same, 5% for the first 500 minimum, 10% for any additional amount.
Yes.
So you buy something for 1.4 mil, it's 5% for the first 500, and then you have 10% for the remaining 900K.
That's great. So yeah, so I get asked this a lot, or people tell me this a lot.
Yeah.
I can't afford a home. I only have this much money. But in reality, they can.
Absolutely. And there's one more point that's worth addressing here, is when I say this is applicable to everyone buying insured, I'm trying to address the point that it's not just for first-time home buyers. A lot of the people think that only first-time home buyers can buy with under 20% down. That's not true. Anyone who's buying a property with the intention of occupying that property can buy insured.
Great. So in terms of investors out there that have an existing home that want to move into the second home, this is a great chance for them to jump into the market.
Absolutely. So you, let's say, bought a townhouse a few years ago and you want to upgrade to a detached home, you can still buy that with less than 20% down. So your townhouse would be rented out and you're now moving into your detached home.
That opens up a lot of doors for a lot of people, and I think this knowledge is very important to them.
Correct. So this rule of the property price going up or the max cap going up starts on the 15th of December.
That's great. So I know a lot of people that are already on the market looking for properties, waiting to close after this.
Yeah.
So, which is really smart, because if you wait for the legislations and changes to come in afterwards, then you'd be fighting with another bunch of fishes.
I completely agree with you, and that's been the confusion. I get that question a lot. Can I buy after the 15th? You absolutely can, but in my opinion, a lot of the people are waiting for these changes to happen.
Yes.
So why not look for properties now? My mortgage application can only go after the 15th, after the rule changes happen. But there's no restriction on when you buy the property. So if you've run your numbers, if you've done your pre-approval, if you're confident, go ahead and buy it. As long as your closing is, say, sometime in January, giving me enough time to get your mortgage approved, so it should be okay.
So if I gave you a call today and run my numbers, would you be able to tell me pretty much, hey Ken, you're going to be approved.
Yeah.
You're good to go. Let's start shopping before the prices go up.
Absolutely, and I do that all the time.
Great.
So here's how the process works. You give me a call, I run your numbers, and then I ask you for a set of documents.
Great.
So I send you a pre-qualification email. Here's your pre-qualification. Here are the assumptions I've used. Please send me these documents to further validate those numbers. You send me the documents, we do a pre-approval, and you're good to start shopping.
Amazing. That's good.
So that's really the first change.
Yes.
The second change is the increase in the amortization. So previously, when you were buying insured, the maximum amortization that was allowed was only 25 years. Starting 15th of December, that amortization is being increased to 30 years. But this rule is only applicable to first-time home buyers or people who are buying new construction.
So tell me a little about first-time home buyers, because contrary to a lot of belief, it extends to more than first-time home buyers.
Absolutely. So there are three main categories that can be included in the definition of a first-time home buyer for the sake of mortgages and to be able to use the home buyer's plan, where you can withdraw from RRSP up to 60K tax-free and you have up to 15 years to return it. You can open a first-time home buyer savings account and all those kinds of things that are available to first-time home buyers. So the first category is, of course, someone who's never purchased a home. Of course, that's a first-time home buyer. But let's say if you owned a home previously, but you haven't owned anything in the last 4 calendar years and this year too, then you are a first-time home buyer. So say you want to buy a property now and you haven't owned a home until now in 2024, and you didn't own anything in 23, 22, 21 and 20, you are a first-time home buyer.
Mind blown.
So if you had a property that you sold, say, pre-COVID in 2019, you are now a first-time home buyer.
Wow.
One condition to keep in mind though is not only should you have not owned a property in the last 4 calendar years, you shouldn't have lived in a property that's owned by a spouse or a common law partner. So if you didn't own anything but you got married last year and you moved into a property that's owned by a spouse, you're not a first-time home buyer anymore because that's a matrimonial home.
Okay, so be careful now.
Exactly. So that's the second category. The third category that a lot of people don't know about, and it's becoming increasingly popular, is people who are going through a breakup of their marriage or common law partnership. So if you're going through separation or divorce, once that's processed, you are considered a first-time home buyer again. And then you're able to use the home buyer's plan and all the other facilities that are available.
That's a huge.
A lot of people don't know about that because, when they're going through separation, they struggle with, property. They may have to sell at under market price, etc. You may not have to do that.
No, and a lot of people actually, they don't know. They think, oh, you get a divorce, you have to sell the matrimonial home and split the funds.
True.
But in reality, if the markets are bad, if times are bad, you can actually get a loan, a refinance, and up to, what was the
95%?
95%, and pay off all your debts, split everything, and sell the home at a better time.
Yeah,
you don't hear this from realtors, but you don't have to sell your home.
Correct. Yes. So those are the three categories of people under first-time home buyer. And like I said, the rule of the increase in the amortization is only available to people buying insured properties as a first-time home buyer, or if they're buying new construction. So one thing that I wanted to talk about though is when I tell people that, and they're like, how big a difference could it be between 25-year amortization and 30-year amortization? So I was running these numbers. So let's say if you bought a property for $999,999, which is right now the maximum for an insured, it'll change to $14,999. If I got that right, $1 less than 1.5 million. That'll change to that number on the 15th of December. But right now, let's say if you bought something for $999,999, you put minimum down, which is $75,000 for that property. Your mortgage is going to be somewhere around $961,999, which is the mortgage plus the default insurance premium that gets added to your mortgage.
What is 960?
$61,999 would be the mortgage amount. And if you had, so at a rate of 4.29, which is higher than the current rate, but I wanted to run a conservative number. At 4.29, your mortgage payment is going to be around $5,200 to $5,300 with 25-year amortization. The same thing with 30 years is going to be around $4,700. So you're talking about a difference of $500 between 25 years and 30 years. Now we both work with first-time home buyers, and we know that $500 a month could make a big difference.
That's the difference between renting and owning.
Absolutely.
Because I rent full detached houses for in the 4,000s all the time. So you're telling me if I have $75,000, I can comfortably buy a home without renting.
Exactly.
That's a huge game changer.
What it also does is it increases your eligibility. So if you were to go from 25 years to 30 years, I'm seeing that difference now because I'm running that number all the more, is anywhere between $50,000 to $60,000 more for your qualification. going from 25 years to 30 years.
So you're making less, you can qualify with lower income.
Yeah.
Wow, that's yeah. So if you guys are on the boat and looking, you guys should really give Mohit a call.
I'd love to run your numbers because I've seen that. I've been in the business for 8 years.
Yeah.
Deal with a lot of first-time home buyers. That $50,000 to $60,000, as you would know as well, could be a difference between getting a townhouse or a semi-detached home.
Huge, huge. So you're actually richer than you think.
Yes.
Bank.
Correct. Those are one of the lenders that we work with, on top of a lot of other lenders.
Yes, that's amazing because you can actually give the best price through all the lenders without having the buyer go to bank.
Absolutely. So those are the two major changes that apply to buyers. Like we said, the others that will apply to homeowners, which we could talk about next time.
Yes, we will talk about, if you guys are looking to sell your home, we're definitely going to set up the next podcast where we will talk about why it is the best time to sell now.
Absolutely.
So thanks for listening. If you guys like our content, please like, subscribe, and comment below if you have any questions. And if you don't like our content, you don't have to subscribe. Pretend you never saw this. Thanks again.
Thank you.